My beautiful friends, yeah, we have to talk again. So much going on. What a crazy day in this market. Geopolitically, I mean, just out there. So buckle up. This is going to be quite a ride. Um, so here's the deal. A nice rally on Wall Street, although well off of the high. The high today with regard to the Dow Jones Industrial Average was 530. 530 points to the good. We closed, regarding the Dow, up about 370. There was a lot of selling when the market got up there. Now, selling the rip. I want to talk more about that as we move forward. So let's talk about the driver here in this market so we can gain a perspective on where it might go moving forward. And it's amazing to me, seriously, how it's being covered on the mainstream financial channels. Actually, very amazing, and I'll talk about that too. So the driver here is pretty simple. The president today made some concessions to China with regard to the trade war. He pushed off adding tariffs on some goods as well. Now, you know what? This is what I find disturbing, and I would love to hear from you on this deal. So we understand that the narrative is very straightforward. China is paying the tariffs. So the president has been explaining that those costs are not being passed on to us, the consumer. This has been the narrative, not just from the president, but from a lot of people in the inner circle over there. Now, today, the president said this. The reason why he decided to push off the tariffs on certain items, we're not even sure what they actually are yet. I know laptops, some electronic devices. This is why tech rallied today. The reason why he pushed off those tariffs and made concessions is because this is what he said. So pay attention. He didn't want the consumer to be hurt by rising prices being caused by the tariffs. Now, where did that come from? This is completely contrary to the narrative. Once in a while, you get the truth. I mean, look, we're not that stupid. We understand that China is not paying the tariffs. Although there are a few YouTube blogs out here of people that I respect, unfortunately, who are pushing the narrative that China is paying the tariffs. They don't understand how the markets work. China is not paying the tariffs. It's being paid by the importers and exporters, and those costs are being passed on to you, admitted today by our president. So maybe some of these YouTube channels out here who are trying to maybe spin it a little bit, and they shouldn't spin a damn thing, should get on board here. So again, that's why the president said he did what he did today. Now, this is how it's being covered on the financial channels, CNBC as well, Fox Business. To them, a couple of their guests, it looks like, and these are not my words, these are their words, like the president has now waved the white flag with regard to the China trade war, so stocks will go higher. I have to agree with that to a certain degree. I mean, the main goal here is pretty straightforward. Keep the stock market artificially suspended by any and all means necessary, something I've described to you for the longest time. Now, with these things in mind, let's talk about this, selling the rip. Very important for traders, investors. I've been advising all of you, or talking a lot about thinking about what you should be doing with your investment portfolios, gauging from our free fall economy being reflected in a bond market that is unbelievably distorted. We came within 1 basis point today of an inversion of the 2 and the 10 year. Incredible. 1. I think an inversion is inevitable. It could happen maybe as I am doing this video blog or tomorrow. So let's put this into perspective. The president has now made concessions to China. And by the way, I find this very disturbing. China is claiming victory on their national media with regard to the trade war. Did they win? Sure. Did we really have a chance of winning here? No. not with a president who's fixated on the stock market. The president could win the trade war for all of us, or get basically, look, again, there's degrees of losing in a trade war. We all understand that. But to get the best deal for us, the American people, the president has to allow the stock market to take a hit. He will not do that, clearly demonstrated by what happened today. And I don't like the fact that China is claiming victory here. Look, would President Trump be doing the same thing? I think he would. But I don't like it. I just don't like that game. Bothers me. It gets under my skin a little bit. I really don't. I do not want the president to fail. I don't want us to fail. I want the United States of America to prosper. And it looks like we're going down the wrong path. I mean, it's very hard to argue that. Anybody, no matter what side of the aisle you're on, if you push that out of the way and you look at this objectively, it's pretty straightforward. So again, back to selling the rip. If we know now that the president is willing to make concessions to China, is willing to push off tariffs, and is calling for what? A 1% rate cut from the Federal Reserve, calling for a weaker dollar, calling for quantitative easing, this raises the specter that maybe selling the rip is not the best plan of action. I was talking to trader friends of mine today, several of them. It seems like the general consensus among my buddies, and they're smart guys, is sell these rips in the market, sell these rallies. Look, despite what's happening in the debt market and a yield curve which is on the precipice of inverting the 2 to 10, there are factors here that just came out today. I mean, the market is fluid. It's always changing, especially when you have a president that runs his show by tweets. So things are very dynamic here. So again, let's back up a moment. And I would love to hear from you on this here. Look, I don't know everything. I just kind of just lay this stuff out in what I feel is a logical format, and try to make sense of what's going on. But so today we had a nice rally here on Wall Street. Again, well off the highs. High was 530. We finished at 370. A lot of selling at the top. Seems like that's the consensus here. But if we consider the fact that the president just showed the world that he is willing to make concessions with China, willing to push off tariffs, at the same time talking about the Federal Reserve becoming more aggressive, the Federal Reserve issuing more debt, the Federal Reserve printing more cash out of thin air, quantitative easing, these factors, people, are stock market positive. That's why I'm not ready to wave the white flag here, quite honestly. Now, we are still trying to break through. This is the third attempt, like I explained to you, to break through that high just before we had the big drop in the Dow. Considering, and we have to look, this market, again, it's very fluid. It changes on rumors. It changes on anything on a dime, but this is big here. So we have to consider that there may be more concessions to China in order to prop up the stock market. For all we know, the president might say, okay, you know what, China, the trade talks are going well again, so we're going to not raise tariffs at all. This is extremely stock market positive. It's very negative for the United States. It flies in the face of everything that we've been hearing out of the president in this tough talk. But it's not about tough talk anymore. All the tough guys out there, the tougher a person claims to be, they're actually the polar opposite of that. They're very weak and afraid. And that's what we have here. A tough guy who's very weak and afraid. Sadly, I don't want to say that, but I think it's the truth. I mean, look at what's going on around you. He's determined to push that stock market higher. He's calling for rate cuts, dramatic ones, literally quantitative easing. So we have to consider the fact that maybe we should not be selling the rip yet. Despite what the bond market is saying, again, I've explained to you that just because we get this inversion doesn't mean stocks are going to go down yet. There's a lag time and a lot of effort is going to be put in. Look, this is an effort today. And I wish the president honestly wouldn't have used the lame excuse that he did it because he doesn't want consumers to feel a pinch from rising prices because of the tariffs, which he said wasn't happening to begin with. He should have not said that. I don't know why he felt he had to get that out there, because it really honestly makes him look bad, in my opinion. And I don't want the president to look bad. I know a lot of you out here think I despise the man. I don't despise anybody. I want everyone to succeed, including the president. Does that make me a bad guy? I don't think so. Anyway, look, I could go on and on for hours about this, but I think I've covered some very important things here with regard to this market, the dynamics in this market, which changed today. They really did. But I want to hear from you. Do you believe that this is the end of the president's concessions to China? Do you believe that there's a possibility that the president might take the tariffs off the table, both of which are majorly stock market positive? Do you believe that we're going to get a rate cut 1% more going negative at one particular time, more dollar devaluation, quantitative easing, also very stock market positive? I mean, it will decimate the U.S. Middle class, whatever is left of it. But the stock market doesn't give a damn about it. Don't you understand? It doesn't give a damn about what the president, all it wants to know is that the president is going to back off on China. That's what the market wants to know, so it can go up. It doesn't care about what's happening on the ground to the regular guy and the regular girl. They're just pieces of excrement to be stepped on to the market. That's the truth. Anyway, I hope this made sense to you, really. And I will read the comments. Do you think the dynamics in this market just changed? That's what I want to know from you. Do you think we should be selling the rip right now? Or should we see first, if we get a failed third attempt to break above that recent high, like I've explained to you, what happened before it did? People, I don't pull this stuff out of a hat. I don't. And I'm not pulling any of this out of a hat. We just have to think about this logically. How this is being set up. We did hear from the United Bank of Scotland today, who said, sell the rip. But again, they don't know everything. All these big lofty banks, they don't know everything. They're just regular human beings working at these places. And most of them don't have a clue. They just don't. They play the inside trading game, the insider game. This is how they make money. They're no smarter than you or me. Believe me on that. So, I don't know. My question to all of you really is, do we sell the rip here or do we wait? Do we have a few dynamics today in the market, huge ones, which just changed? Is the president about to make more concessions to China? Is the president about to remove tariffs from China? We are going to get rate cuts. 100% lock. We are going to get a dollar devaluation moving forward. We are going to get quantitative easing. JP Morgan just the other day said quantitative easing is coming and soon. One of these not so smart banks. Anyway, that's where we are, people. Let me know what you think. This is big. Share this video. Share it as far and wide as you can. If you're part of my team, I'm counting on that. I love all of you from the heart. I mean it. And I want to hear from you. Where do you stand on this market right now? That's it. I'm out of here. See you tomorrow morning.